Let's dive into the crypto markets with Bitwise Management Chief Investment Officer Matt Hougan. Welcome back, Matt. Welcome back, Matt. I said welcome back. I don't know. It's pretty goth of me, but welcome back. So yesterday, we had the CPI number come out, and that was slightly better than expected, if you will. It was slightly lower than expected, and today we're waiting for the Fed. Everybody is 92%. Probability of a pause, or was it aggressive or hawkish pause or something? I don't know what they're calling it, but basically just a breather, just a 1 month breather until next month, and then all of a sudden we see that the markets are expecting higher rates. So what does this mean for the macro situation, and of course what everyone watching this really cares about, crypto?
Yeah, well, let's go right into the crypto side. Thanks for having me on again. It's great to see you. The hawkish pause. My base case, honestly, is that the Fed mostly right now no longer matters to the price of Bitcoin one way or the other. It mattered a lot when we were cutting rates to zero. It mattered a lot when we were living through the most aggressive rate hiking regime in history. But now we're fiddling with 25 basis points. We're playing with semantic terms like a hawkish pause. There are much bigger forces going on in crypto. We just have this vestigial memory that we should remember what the Fed does is important. Look, the next major big Fed move is to cut rates. Maybe not now, maybe not next month, but eventually they will cut rates aggressively to deal with a weakening economy. And I think that will be supportive for crypto. But for right now, it's fun to watch the Fed announcements, but I don't think it's going to move Bitcoin prices one way or the other because it's just fiddling at the edges.
It might be fiddling at the edges, but one thing that we saw is that we caught financial institutions with their shoes off. Let's just say, making it family friendly, and they basically had on their books all this long duration, duration bonds, and mortgages, basically, which messed up their balance sheet, which messed up things when they had a couple of them had runs essentially. And the Fed basically looked at this and was like, oh, okay, well, and that might have been part of why we saw this pause. But if it continues to raise rates, could there also be another situation happen where all of a sudden it kind of cuts down on risk appetite and therefore affects crypto?
Yeah, I think that's true if it sustains over time and they continue to raise rates aggressively. I just don't think that's what we're going to hear out of the Fed today. We're going to hear, concerns about lingering inflation, but a moderation of economic prospects and sort of a mixed message. But for sure, if rates went, straight up and to the right from here, that would be negative for the market and would cause concerns in the banking sector. As you suggest. I think more when we talk to investors out there, what they're hearing or thinking about as the Fed fiddles with rates is what it means for global economic prospects, what it means for an economy that's decelerating at the same time stock prices are up, and where do they find growth for the rest of their portfolio. That's what they're thinking about. But for sure, if we get a big surprise from the Fed, it will shape the markets. I just don't think we're going to get that today.
So, Matt, you mentioned that interest rates are not what's moving Bitcoin. So, what are these forces that would have an impact on Bitcoin's price?
Yeah, great question. My base case is that we're in a period like 2019 where crypto prices sort of muddle along with relatively low volatility and relatively positive returns over time, but it's sort of a quiet period. If you remember back to 2019, very few people wanted to enter the Bitcoin market. It ended up being a fantastic time to come into the market because 2020 and 2021 were so good. But Bitcoin didn't really have a narrative. I think that's where we are here. Bitcoin is sort of lacking a narrative. There's not that much more negative regulatory news that they could throw at us. Things that would move the market were new information about regulation or new traction on real world use cases for assets outside of Bitcoin. Things like what's going on in the Ethereum ecosystem that could boost the animal spirits in the crypto market. I think crypto is going to be driven more by fundamental factors and regulatory factors over the next 6 months than it is by interest rates or macroeconomic things.
Well, that's an interesting prediction because we've just had two massive regulatory developments, perhaps the biggest in the last few years, that haven't really had any impact on Bitcoin's price at all or any measurable impact. I mean, we could say that it did, but it kind of didn't, right? So I mean, you look at like the SEC going after the biggest exchange in the world and the biggest exchange in the United States, and Bitcoin was kind of like whatevs, you know? So it's interesting. I mean, I'd be interested to see if that was like a change. But while we're talking about those lawsuits, what's your take on them? I mean, I feel like you said something about how Binance lawsuit was good for crypto. I'm curious if you could explain that and if you feel the same way about the Coinbase lawsuit as well.
Yeah, the Binance lawsuit is good for crypto. You know, Binance was an important part of the crypto ecosystem. They onboarded a lot of people, but it's an imperfect institution. One thing we've learned over the years is that two things work in crypto, either full decentralization or regulated centralized entities. This messy middle where things like FTX fell, where you have centralized entities that aren't regulated, raises risks for investors. And the sooner we squeeze that out of the market, the better. And I think that's what's going on at the heart of the Binance lawsuit. The Coinbase lawsuit is obviously different because they're a major positive actor in the crypto ecosystem. And I actually think it goes to something existential. And, you know, when I listen to your last guest talk, and when I listen to people cover this, I think they're missing the point. They sort of think crypto assets can come in and register. What the SEC is saying at its core is it's impossible for a group of entrepreneurs to come together, build a network, and then decentralize it. And of course, decentralization is the core of what makes crypto interesting. Without decentralization, a blockchain is just a bad database. So if we don't have this pathway to go from a small team to decentralization, we're going to stunt the growth of crypto in America. I don't think that's what's going to happen. You know, America does silly things, but it doesn't commit suicide. I think eventually legislators will step in and realize that we want there to be this space for decentralized networks to exist. But that's what's at stake in the Coinbase lawsuit. It's really sort of existential for the future of crypto. Otherwise, the only decentralized networks the world will ever have are Bitcoin and Ethereum. And I don't think that's the future we want.
You know, Bitcoin hasn't moved on the news of the lawsuits, but altcoins have. And there have been a few reports that have come out that say, you know, investors are fleeing altcoins. What's your outlook on altcoins as Lawrence mentions Doge?
Yes, altcoins, I think you did see a separation in price the week of the Coinbase lawsuit for sure. I think Bitcoin was down about 5%, and coins like Solana were down 20, 25 or more percentage points. I think that's a rational response for investors. This lawsuit is a fundamental challenge to those existing altcoin securities. Now, the bet an investor could make is that the SEC won't win out and there will be a rebirth, or that these networks can grow abroad. And certainly the animal spirits in the developer community around assets like Solana are still very strong. But I do think the regulatory headwinds hit those assets much more, obviously, than they hit Bitcoin and Ethereum. I think that's a rational response, and I suspect that will hang as a shadow over those assets for the next 3-6 months until people get comfortable with it and see how they're developing abroad and in other locations.
Matt, thanks for joining us this morning.
Thanks for having me.
That was Matt Hougan, Bitwise's Asset Management Chief Investment Officer.